All right, so hello everyone, Doug here with the LincolnList.com. Today I have a training lesson for you, and I'm going to answer the question that's on every trader's mind right now. Every trader's mind. When should I short Tesla? Now maybe that's actually not on every trader's mind. Maybe you're out there, you don't roll that way. Maybe you're just spectating. But I tell you what, there's a lot of people that's looking at it, and with just cause. I mean, this thing, it's silly, right? It's crazy. It's got to come down. But there's going to be a time, and there's going to be a place for that. And when you see something like this, the opportunity is enormous. If you go back, some of you have been following me a while, the biggest trade last year was a Beyond short. So what I want to do in this video is I want to share with you some of the tips and things that I've learned over the years and how these stocks work when they get like this. You can call it crazy, you can call it silly, you can call it ignorant, you can call it whatever you want. But every single year, we see a couple of these. You know, you can go back, you had KBIO, you had VLTC, you had dry ships, DRYS. You had Beyond, like I said. You had, I think I mentioned Tilray. I'm not sure if I did. You had that one too. So it's not like it's something that we haven't seen. Every year there's a handful of stocks, maybe two or three, that go through these super euphoric stampede Momo runs. And the problem is traders always try to pick the top. And the stupid thing that you can do, which I've made the mistake in the past, is you just don't short something because it's up too much, or you just don't buy something because it's down too much. That's not a good enough reason. Things pivot, things work a certain way, and you need to be patient in these scenarios, because if you mess up or you get too early on something like this, you're going to lose your account. You are going to lose your account, simply put. I mean, there's probably a whole graveyard full of short sellers from KBIO and dry ships and tons of others. It's nothing that we haven't seen. And that's also part of your development as a trader, how we actually learn and how we learn to do things the right way. And why you need so much screen time is because when you're trading as a technical analysis trader or a pattern trader, that's what you're basing it on. Every time you see this, this is normally what happens after that. So it's that recognition that, hey, I've seen this before. Different name, but I've seen this move before. So I'm going to share with you. I'm going to talk to you about a couple of these in the past. Like I said, Beyond was the biggest trade I had last year, and it was a short. I'm going to share with you just how these go and how this might go and what I'm going to be looking for if and when the day comes, it's time for me to short. Now, the first thing that I do in a case like this is I don't try to actually call the top. I do look back in some of the things, like when I talked just a few weeks ago in the market mutterings, where I talked about how emotional numbers play an impact on the market and how I feel Dow 30,000 is coming just because you're so close to it. I'd have to feel somewhat the same here in Tesla, that you're just hovering around the 900s here. It would seem like just that emotional piece for a trader, for the market, it seems like 1,000 is something that's probably going to get done tomorrow. It seems like the way I'm doing this now, tomorrow, the next day, I don't know, but it seems like that's going to be the next push in this. Now, one of the things that you look for in these is, as they're in their actual FOMO romping stage like this, the behavior themselves gets too erratic for most retail traders to even do battle with it. Because as you're looking at these, just the simple moves, and Beyond was the same way, Tilray was the same way, they get to a point where the candles themselves get so exaggerated, it becomes almost impossible for a day trader that's looking for value to trade it, because you know, you're talking about these candles like this, just up and down the first minute here of the day. $20 up and down, $20. Not very many traders can kind of handle that volatility of going up 20 and down 20 within a 5-minute span. Just here late today, 956 down to like 858. So like almost $100 candle, $100 down candle, and then snaps right back. So it gets to these points when it's like that, it's too hard for someone to just pick tops or pick bottoms if it's going the other way. It's just out of control. Where you're really going to make the most is when this thing starts to slow down that momentum. And it will happen. At some point, that's going to happen. As they always say, the market will rise prices as far as they need to go to make them unattractive, and go down as much as they need to make them attractive again. At some point, this becomes very unattractive to everyone, and it will stop chasing it. Now, if you go back and you look at two charts, let's talk about the nearest one when I talked about Beyond. I noticed this because over the years I've seen them behave the same way, and I want you to focus on the ramp that Beyond had. Let's try to go right here. Back in This was middle of July, okay? If you've noticed what happens, they all go on this initial surge where they start to break out and they just start skipping prices, it seems. They start stretching and stretching. And this one just makes this move. Now, albeit not the size of a Tesla, but still the same theory applies. It goes 174 to 245 in a couple of days. So what's happening towards the end of these patterns is that the price stretches. So the time it takes to jump $20 might be a week. Then it goes to half of a week. Then it goes to like a day. Then it's like every 5 minutes. At the end of these patterns, the candles always get exaggerated. They always start to stretch. And that's your sign that it's nothing but an emotional trade. It's nothing but a FOMO trade where people are no longer using, any kind of realism whatsoever. They're just chasing. It's just a fear of missing out syndrome. But pay attention real close as you see what happened here with Beyond. So what happens is initially, it starts to make this pullback, and it really takes this first initial hit. So what you first see out of this is this massive initial drop in the stock for the day. And then it just sort of immediately tries to recover like the next day or two. So when you're looking at, let me kind of open this chart up, see if we can take a better look at this. I know it won't look as vertical when the chart's all crunched like this. But the key is what happens here first is you have the initial sell-off, and then you have that initial panic back rally. Now, a lot of that has to do is traders are just waiting for every red bar to just jump in on this. So one of the first things that I look for, one of the first things that I've seen that happens on a regular basis is when that blow-off move takes place and you get that first initial pull in there, it almost always seems like the stock tries to make a comeback. It tries to gear back up and it tries to make another move. And it's on that other move that really dictates how that's going to all go down and when it's going to go down. Sometimes those happen immediately, then they'll actually go back up to the all-time highs and maybe slightly crack the all-time highs. But the first move that I always see that indicates that the end is somewhat near is the big euphoric move. Even Digley even did this now that I'm thinking. I don't know why Digley popped in my mind. But it goes really gets really parabolic, then you get this massive wash, and then it comes right back. And most of that time, I think, theoretically, is short sellers piling in too early. And then sometimes it's able to squeeze back up, and there's a lot of people probably thinking that's a dip. It's the fatigue of that second move. The fatigue of that second move starts a longer, more exaggerated, more consistent down fade. And they all kind of happen in the same time frame. So if we look at Beyond here, this started its initial descent. And here's another thing I want to just mention while it's on my mind. And I'm trying not to jump around here with everyone. But the thing is, everybody thinks they have to be at the very top or you have to be at the very bottom. But when you have something that's up like $400 in 3 or 4 days or 1 week or whatever silly stuff it is, you don't have to be the first one here. You can wait until the pace and the rhythm slows down on something like this before you decide that you want to try it. But you take a look at it here, so it kind of makes this pull and then it immediately comes back and then it starts to just kind of roll over a little bit. So what this took is went from basically about a half of a month it took for this stock to slow down. Then it goes sideways for another month. And then after that, this thing actually rolls over a lot more. So the thing I'm trying to point out here, for the sake of not getting everyone confused, is everyone's trying to pick a top up here. And they're always looking for, hey, I want to get this max. I'm trying to catch this $100, $200 one down day that it's going to have. It's too hard to do that. It's too hard, and you're going to blow up a lot just trying to, you're going to lose a lot trying to do that move. You would have actually made more money just shorting it here with a lot less stress by waiting another 30 days. I mean, this is all about being patient, just waiting for 30 days, waiting for more levels, waiting for volume to get taken out of that. Some of you guys trade options, waiting for option premiums to get better because options right now are really expensive in something like Tesla. But the thing I want you to focus on is first it starts out with a blowout FOMO move. You start to see this really huge pullback one day and then this instant snapback. that instant snapback starts to fade. Then it begins something that's lasting a little bit longer. But remember, those initial few days or week after that, it's going to be volatile because people are still trying to pick it and pull it and dip it and do all that kind of stuff. But like 30 days later, half a month later, you're going to start to see the thing just slowly start to dwindle away step by step until it finds a more comforting support zone and so on. So you saw that here. Now let's take a look at a couple of others here as well. So let me show you how this Tilray was very similar to how Beyond. Now I know when you're comparing Tilray, Beyond to Tesla, it's a little different things, but you might see some similarities here. Here was Tilray's move. Same thing. You had this monstrously stretched out, humongous day on it. Major pullback here. Yeah, you would have banked if you would have timed it. But again, I guess one of the things I'm trying to say is you can't be perfect here. You can't just time everything, especially something like this that carries an enormous amount of risk. Because remember, while you're trying to do this, if you're going to put a stop on Tesla, you're going to give up $6 or $7 bare minimum to make a trade like that. I mean, it's so erratic. And, you know, you might just get stopped out and 20 minutes later it would have worked. You don't know. It's just so back and forth. It's just too hard right now to pick that. And that's not how you make money. It's picking tops and picking bottoms. It's picking your shots at the right times. And then you have this rebound move that takes place, and it roughly happens about a couple of weeks later, makes his last move. And then from there, it begins this longer term descent. Now, again, these are all three different separate companies. I would have to rank them in that order of worst to first would be Tilray, Beyond, and then Tesla. But we're not saying that Tesla's going to fade away into the single digits like this and go under. It's a completely different sector, completely different company, completely different everything. But what we want to look for are those clues. And what you're seeing here in both of these, and you can go back and you can look at KBIO. You can look at dry ships and you're going to see the same thing. You're going to see this initial euphoric move and you're going to have this instant blast. And that's the problem. The traders are trying to catch the instant blast and pick up the top. And as soon as they see it drop $100, like, damn, I missed it. No, it's just getting started. Trust me, when it goes up $500 over the last month, it's got plenty of room for you to bag $10, $20, or $30 on this thing. You don't have to be the first one there. Let it settle. So you get that initial move, then it gets sold off, then everybody's either piling on short and they get squeezed again, or people want to buy it because they think it's going higher. Bitcoin did the same thing, and it makes that recharge. It's that second recharge that you're looking for and the failure on that. And after that second recharge, I usually estimate it takes about 1 to 2 weeks, and then everything starts to slow down and you start seeing it melt. Rather than panic up or panic down, it starts to melt down and slowly start searching for a level it wants to fade to. Now again, this is why I based my Beyond trade was very much off of Tilray, and I figured, hey, after about 1 month of this, it just sits here and fades for the next month or 2 months, and that's exactly what it did. Now, I'm not saying Tesla's going to go quite like that. I don't think you're going to see a 2-month fade on it. Maybe you do, but I could see how you see a pinch into probably the 800s, maybe after it hits 1,000. I think it's going to hit 1,000. I mean, unless it's downgraded or a secondary or some sort of piece like that comes out, maybe thwarts that. But I would base on the way that today's action is that you're pretty close to seeing that in the next few days make a more significant rollover, because what you saw with both Tilray, what you see with KBIO, what you saw with Beyond is this enormously large daily wick that really, really pulled way, way off the highs, really seeing that shift in balance. So what I would expect here is within the next day or two, maybe even tomorrow, it's going to try to recapture some of this up here. And then you're going to see something possibly next week that starts to trickle down a little bit more, probably somewhere between the 800s, the 700s, maybe, you know, in a month or so down towards the 6s. Now, that doesn't always mean it's going to work that way. But for me, when I'm looking at shorting something like this, at this point, I would use options for a Tesla. I imagine I'll take a stab at this at some point, because a lot of traders will say, why? It's worth risking a few $100 or maybe a few $1,000 to potentially make 20,000 or 30,000. You know, you're not going to see but a handful of these a year, if that. So you have an opportunity right here now to bag, you know, maybe 100, 200% winner. So you got to try, but you know, you can't be stupid at the same time. You just can't haphazardly go into this. So what I'm looking here for to sum this all up is this initial pull here is telling me it's the start of something. Now, what's kind of got me in the middle of, let's say, perplexed, so to speak, is the 1,000 mark. Yeah, I feel like emotionally it wants to hit 1,000. But I would expect some reject off of that. And then I would expect that that second rally, that second rejection of the rally, the second time it comes back up, that you're going to see something a little more vicious on that, or something that lasts a little bit longer. Now, let's say it doesn't do that. There might be a secondary scenario that you see here, and that would be whether or not this thing does, maybe this is the top. Let's say that's it. That's it for the year. It's topped out, and it doesn't. Well, if it does come back, at some point it will settle in, and then it'll still try to bounce. You know, maybe it drops all the way to 750 and bounces to 800 and then rolls over. So there's going to be a bounce after any sort of sell-off. And to me, what I'm looking for is that bounce, is to judge on that bounce, because by that time, all of this volume, all of this heat, all of this psychoticness is starting to be, volatility, so to speak, starting to be removed from the stock. And it puts you in a better position because you're not trying to pick tops and bottoms. You're getting the thing to slow down, and you're getting the, because the money will shift out of this and it'll go somewhere else. Somebody else next week or something is going to start getting all this money. And it's going to rotate. Sectors always rotate. That's what it does. And that's what I'll be looking for. And I'll probably use options. So again, let's wrap it up. What you look for, it doesn't matter if it's a smaller move on a smaller stock or a big move on a big stock like this. They all work the same. You get this initial FOMO chasers move. Then you're going to get this initial pullback, and most people are going to think that was it. That's the sell-off, that's the pullback, and you got people to step in and try to buy that pullback, and shorters going to try to chase it, and they're going to get squeezed, or shorts are going to cover on that first rollover, the ones that happen to get lucky in top ticket. But it's all about that second run-up. Look for that second run-up, that second bounce, and then the rejection off of that. Usually that second go-around marks the top. Wherever that thing pivots, wherever that thing stops, that starts something that lasts a much longer period of time. And that's normally when these stocks experience a full down month. And they'll just go from start to finish, the whole month, just trickling down. Some of them will be like a Tilray, where they'll go from, triple digits to single digits. Like a Beyond going from in the 200s there down into the 70s. I don't think you're going to see this go to 300, but I think you'll see a pretty significant pull. But that's going to be a much easier play, waiting for that pattern to develop, and then go from there. So I guess if I would draw it, say maybe you get one that maybe drops a little further, maybe a rebounds, and it'll be something like that that'll send it much lower. But we'll see. Anything can happen. It could be wrong. I'm not going to step in front of it right now, here, acting like this. No. So maybe it works, guys. Maybe. I'm just sharing it with you. Hope you enjoyed it. Anytime you have questions, comments, quarrels, or suggestions, send them out to me, support@lincolnlist.com. Thanks for your support, and thanks for watching this video. Take care. Trade well.